Can you hear me? Hope you can hear me. Testing, testing. One, two, three. Yeah, everything's good. Today I've got the microphone working again. Better microphone than one we had on our camera. Hope you're well. We are Tuesday the 27th of January. The month end looms. Big day tomorrow. We got those earnings from Microsoft, Meta, Tesla, IBM, AMSL ahead of that from Europe. And then obviously we've got the Bank of Canada and the Fed tomorrow night. So, but the main news continues to be Friday's follow through from the strength of the yen. So, big move late on Friday, down again yesterday, dollar yen, and this morning we've been as low as 152.87. So, 153 has been breached for the first time since back here. On the 7th of November. So November, December, January, February, 3.5 month low. On near 3 month low for dollar yen as expectations around intervention, whether it's actually happened or not yet, continues, and the fiscal expansion that the Prime Minister is going to run on to try and stimulate the Japanese economy. Bonds have gone in the opposite direction. Yields continue to move. I look at the 10-year this morning in the US, it was 421. 423 20 range. It moved up to 423 earlier, 421 when I last looked. So dollar remains relatively weak. Obviously yen even weaker. We look at the dollar crosses today. Euro's gone through 119.50. Look at euro, similar time. There we are. This is the daily trend. Remember, a big update today. Weakness in the dollar, buying euro bid, sterling also bid 137 670. The Aussie, remember we talked about the Aussie at that September high, September 24 high. We've got the weekly on the Aussie. We can see we've actually breached that now. So this is that zone we were talking about last week and earlier this week. So gapped through that, interestingly, this morning. So we continue to move high, and obviously that brings in .70. We're at 69.58 at the moment. And again, if I zoom this in, we look to the left, continue with dips here, beginning of 2024, mid 2023, and we go all the way back to the beginning of 2023 for where we are now. So Australian dollar on the receiving end of the weakness in the dollar. The big news overnight was the announcement from the EU and India after 20 years, best part of 20 years of negotiating. They've managed to, or the EU have managed to crack the Indian market. So trade deal, a huge trade deal. 20 years in the making, and von der Leyen called it the mother of all trade deals. Obviously, best part of 2 billion people in India, best part of 500 million people in EU. It's a huge market. It's not completely trade free. Obviously, some massive tariffs getting into India, but it's a huge market. It's growing incredibly quickly. Soon to be the 5th largest economy in the world. If it isn't on, it is on some metrics. But growing very quickly. Obviously, a huge disparity in income and lifestyles in India. Some of the highest real estate prices in the centre of Mumbai in the world, and yet some of the abject poverty in the villages in the rural areas is maintained. Very structured society still, and obviously a very strong nationalist government in Mr. Modi. But anyway, the deal has been done, or it's been announced. Obviously, the devil's in the detail. I haven't actually seen any response on Truth Social or anything from the orange one yet so far, President Trump, to that. Obviously, something to say, throwing a bit of his toys out of the cot, no doubt. But anyway, he's got his own political problems at home with the hideous murder of that ICU nurse shot by the ICE agents in Minneapolis. But Minnesota, sorry. So anyway, Aussie, say highs not seen since this time in 2023. So 3-year high for the Australian dollar against the US dollar. Sterling, let's keep these weekly charts going. Not quite as buoyed, but we're back. In fact, it's more buoyed. Higher from the 25 high. So sterling, all even stronger. Sterling back to October 2021. So Back to the COVID era, sterling at 137.65. So weaker dollar ahead of the Fed tomorrow. Whether this is a play, we shall see. But strong week last week. You can see here for the for cable, and it's followed through so far this week. Obviously, lots to come yet tomorrow, Thursday, and Friday. And finally, CAD 136.40, which is more of a measured move against the loonie. And remember Mr. Carney last week, President of Canada, Prime Minister of Canada, talking about the middle countries need to get their act together. Trump threatened them with more tariffs over the weekend for doing a deal. If they did a deal with China, Carney dealt with that like the mature adult that he is. And Mr. Trump, President Trump, not getting his own way on lots of things currently, but he's got a big speech tonight to blow his own trumpet about how well the US economy is doing, and what a great president he is, no doubt. But huge political pressure, even for him, with what's gone on in the last week or so with those immigration officers, 2 US citizens shot blank, dead on the streets of the United States. Where we go. 136.40 dollar CAD trade. Gold yesterday hit new all-time highs. We've come up a tad today. 5,100 was breached yesterday. We come down a bit later, earlier this morning. We're still up for the. Sorry, it's the weekly chart. We are down today. But sorry, we were down at the moment, but we were up for the day. So there's that all-time high there, 5,110, and we continue to move high. And as I keep saying, be careful trying to short this at any with any given muster. Trade what you see, not what you think. We are consolidating at these all-time highs. So sideways, the lowest we've got today, just under the 5,000 level. So huge. I thought I'd put the 5,000 level on here, but so I didn't. Let's do that now whilst we're here, horizontal line. I thought there might have been a bit more profit taken than we've seen at 5,000. The momentum is going forward. The central banks are still stocking up, if you like, at these rates. So it's fueling the bid, and we've remained, there you can see, nicely done there. We can remain over $5,000. Big new, when it pops, it could pop quite aggressively, but at the moment, we are bid, and we've been bid for a long time, haven't we? The 4-hour chart, very, very bid, and the hourly chart, daily chart. We just had a look at the daily chart, didn't we? Right through that much extended fib level of 2.6, we don't see very often. We're through that, and off we go. Fib level was appropriate when we wanted to get to 4,700, but we've ramped up for the week since that as well. So just hang on there. You can see here the stochastic still, well into the overbought area, but it's been higher in this rally. So it's going to take something to disrupt that, and something significant could obviously quite easily happen at any point. So let's have a look at today's main data. Let's just bring up the calendar, and I'll bring in this extended one in a minute. What can I say? Yeah, so that's what we're looking for today. Consumer confidence. Remember, the consumer in the United States has been absolutely key. It's due in a minute or two. 90.6 from 89.1, so 0.6 of 1% higher. And Richmond Manufacturing Index. I just put this one up because just another example. We've seen it with the other two major manufacturing indexes, the Empire State and the Philadelphia. Continues to be, despite what Trump's saying, despite his 12 months in office, still continues to be in recession. -7 last time, -5 is expected today. It's not just Trump, but through the Biden period as well, post the COVID pop positivity here, and it's been a trend that's well negative for this extended 2-3-year period. So it's nothing that the current president hasn't turned around, regardless of what his rhetoric might try to tell us. So if we just go to the live calendar and see how that is going to come through in a minute. It's pending. Just put that up for you. So 84.5. So consumer confidence has slipped. It slipped quite significantly. It's a whole 5 points lower than was expected. And Richmond manufacturing index remains moribund, -6. So again, it's negative data for the United States economy, or not again, but it is negative data for the United States economy. Obviously, yesterday's durable goods orders, which is very delayed, was very positive. But the markets are very much focused on the political situation with regard to sort of the sentiment, and then what the Fed might or might not say. There's worries about Powell, what he might get asked, and how he will answer at the press conference tomorrow. Not going to get drawn on any political issues, but obviously the issue of a new chairman. There's the impending investigation into what the Department of Justice are trying to say is the overspend on the refurbishment of the Fed building itself. There's the Lisa Cook issue that could all fall, either way, or could fall even. Could fall in the Fed's and Powell's way. It could fall Trump's way. Trump's obviously betting quite hard that he's got the momentum and the way he's appointed the judges he has to the Supreme Court. He gets his way. Airwaves is in silver, long or short. Depends on your time frame, my friend. If we just look at and what strategy you're using, but generally, we had this massive pop again yesterday for silver. We'll just come back to the calendar in a minute. So Sylvia asking, silver's had an even more rampant run than gold. So yesterday we went to how high did we? 117. We are way over the 100 level. We're 106.5. Where are you going to short this, or what time frame are you shorting it? Is the key. The question you've got to ask yourself. Where's the higher time frame trend? Well, the daily trend is very positive. The 4-hour trend is very positive. A bit of congestion here. There's that top sort of bit of sideways action last day or so. But if you come down, I'm guessing you're talking about tradable time frames. So sideways consolidation a wee bit there on the 4-hour. That's what you'd be looking at there. That top there, that 112.53. We're down. The support there on the 4-hour is 104. But if you're trading it on the hourly, it's probably a bit weaker, a bit extended. There's a consolidation on the 4. It's a bit more extended there on the hour. So if we just put a bit of range in there, so that's our. Let's make it just a dotted line because it's for these. So I know it's for these sessions, and that's our low today. That's the actual low, that intra-hour low, but the bottom of the candle is a little bit above that. So we got this 117.27 top, 101.88. So $100 is very much a support area. So sideways action here. The hourly trade here using this particular setup would have gone long here on that candle there. You can see where we got the cross of having touched the outside of the Bollinger Band. We've got the cross of the K and the D line here on our stochastic set of 10, 6, and 3. Thank you, Trevor Neal, for that. But it hasn't moved away, has it? So we'd have gone long here this morning. It's really not moved. It's then crossed again, so it's got you out. So you've got in here. We're looking to get it to the outside of the Bollinger Band. I'll just make that a bit bigger for you. Looking to the outside of the Bollinger Band. Didn't happen, so we got in here on that cross. Got as high as that, and then then we've crossed here and we got out because it's gone short, and then it's plummeted here in this last hour, the 2 till 3 candle. That's just finished down. So hence your question, I would guess. So that's down. So it's rejected that level today, 112.60. So could bring our current support level down. So that's our next level there. So 112.60, 117.27 is our high this morning, or last night, I should say. So that is the day high. In fact, that was yesterday, wasn't it? Sorry, I thought it was this morning. No, it's not. That's yesterday. So our day low. In fact, that was yesterday's low. So today we've been quite a tight range. Sorry, I've got that. So let's make that line red for you, and I'm going to put another one on there. So the range today has been that, and we're right at the bottom of the range of the day. So that was our starting So we're at the bottom of that range now. So I'd be watching that now. So the next level will be the bottom of the Bollinger Band there on the hourly at 104.53. And then yesterday's low, which took us to 101.88, which we talked about before. So that's hence your question. I'm getting airways, my friend. So on the short term, that's an hour short term. If you're looking at 15 minutes, it's probably already dipped. There we are. So the 4 hour, again, it's not really. There's the cross there. So that would have been short there at 7 o'clock this night. It's done nothing really today, to be honest. Airways, we just be careful trading this. The spread can be a bit peaky, but US is open now, so that's continuing to decline. This strategy here on the 15, there's those two lines, those two levels we talked about on the higher time frames, is looking to continue lower. Sorry, let's just do that. There we are. This is continuing lower currently. See, that's still until we get into the overbought area. We might turn before that, but that's the 15-minute trader is still short from that move there. Oh, in fact, no, he's got short there. In fact, it would have been after that. So he's got short there. Initial targets there. If the stop loss had been a bit too tight, it'd have been stopped out on that candle there at 1 o'clock. But it's continuing to move lower. Got messy there. I got out of this. I haven't been trading this on this time frame, but let's go down to a really short time frame, which I guess is what you're looking at. 5 minute. So the 5 minute is crossed. He's moved lower, lower, lower. It's crossed here, but it's it's moved up and then it's rejected. So the trend is continuing lower here on the 5 minute. So again, I need this to cross back up. I need here on the 5 minute time frame. I need the blue to cross back over the orange for us to buy this. This is still this is a continuation short there. In fact, there it would have been as we plumbed lower. There's that hourly low we just talked about. And the lower the days down there at 101.88 on low from yesterday. So we're now trading at the day lows, and the trend is down on the 5 minute. We've got the 10 minute. The trend will still be down. We're in the under half of the Bollinger Band. We're trending down. So there's still a bit of legs to the bottom potentially there on silver. So I'm analysing that airways. That's with the mean reverting strategy. If we just go to be messy as well, it's not clear. If we go to a trend following strategy, something like the MACD and the SAR, a bit clearer here. We're still positive till we got that big flick. This will now flick, I'm pretty sure. This is MACD's gone negative, so that 3 o'clock candle has closed out this long position. No, that hasn't worked there on the hourly time frame. Just take this down to the one we were just comparing, the 5 minute time frame. You see that's short, flipped, and now it's very much short. You can see there that's moving. The MACD and the signal line here, the orange and the blue lines on this setup, MACD, standard setting, 12, 26, and 9. Red histograms, very positively negative, less negative as we rallied up, but then, down. So that's still down. Those levels we talked about on the other chart aren't marked on here, but you can see there's that 101.80 level from yesterday, 9:30. So it's just, it was just a spike that, so you might be able to rule that out. So 103 really is the low, so at 106.7. So that's still short, basically, on that 5 minute time frame. The slower one, our crossing exponential moving average strategy. So here, 5 minutes short, still short. There you go. That's the smoothness of the exponential moving average. So big move lower was there, went against us, stopped us out, got in again there, down, down, down. It's reversed. We got out there, didn't cross. Another short here at 14.45, and we're still short. These are aligned moving averages, the 20, the 5, and the 9. That is still short. Whether you buy at this level was obviously a question. But again, as we zoom that in, we can see a bit of a cluster here. And there's that next leg down at 105 there on the 5 minute candles from opening trades last night. But obviously they were opening trades on low volatility. But so it's still, overall, it's still short airways if you want to take that, is what those analysis is telling you. So, or that analysis, or my analysis of that, those setups is telling us. So anyway, let's just go back to I hope that's answered your question, my friend. Comments welcome, positive or negative. It's the only way we improve, my friends. Yeah, dollar, as I say, dollar was under pressure. Crypto continues to weigh 87,800. Let's go back to the our default with all the lines on our volume demand and stochastic. So we go up to the daily time frame. As we say every day, it's weak. We've broken out. We've broken out of the top of the channel. We've come back down. Now we're at the bottom of our channel at 85, or getting towards the bottom of our channel at 85. But as we did during the Christmas period, we're now pivoting through this 88 area. So nothing to say screaming buy. The congestion zone, the sideways action is still in play. 85 is the bottom of this particular channel. Then we got 80. Then we got 75 to the downside here on the daily time frame. We need to get back over the 92, 95 window, if you like. 92 key trigger for me, and then 95. And then we'll, might have a go at all-time highs again, over 100,000, 125,000. But at the moment, it's very much sideways action. I think we might need some clearer direction from the Fed, or even the administration in Washington, about more crypto stuff. Yeah, no problem. Airways 3. Just be careful what you're trading. Have a strategy, have a system. Follow it. Admit you're wrong when you're wrong. Take your losses like you take your winners. Keep it all in perspective. We had another big loser this morning, points wise. It was less than 1%, but it was 500. That equates to 500 points on the Nikkei. That's and our reporting points wise. So you take the rough with the smooth. So we've had a shocking last week, as I said yesterday. The worst trade points wise, not percentage wise, but certainly points wise, the worst week for me in 72 weeks of trading. So all the way back to 2024. So anyway, CAD yen hit target 1, and Euro yen hit target 1 as well early, but that's been the only yen exposure we've had. It's out of the money now. They hit target 1. I'm not sure what's gone on since, but anyway, so Bitcoin continues its sideways action, and the point I would make, we're at the bottom of the channel, well, bottom of this trough at the moment. There's the green line there is 85, and we're currently trading 87,800. So nothing to get too excited about that. But the trend, we're in the under half of the Bollinger Band. We're still down. And here on this strategy, on this daily time frame, it's looking to cross. So those shorts might have been closed yesterday as we went up. But you can see here, the blue hasn't crossed. It's hit the orange and it's gone back down. So we could be oversold for quite a while. Looks like we need to test 85 as well again, like we did here just ahead of the Christmas period here for 1, 2, 3, 4, 5 days. Didn't want to go through 85. Clearly automated buying there ahead of Christmas. Probably the same potentially at 85, or we breach it and then go and test this intraday low that we put on here from November. Takes it into 80,000. So nothing to get excited about. With regard to Bitcoin, oil continues to play the market, 61.40. So big update on Friday. Down yesterday eventually. We had pushed higher earlier yesterday, looking for 62. Didn't happen. We're currently at 61.34, so up today. And but again, quite high, relatively high volatility. Bigger bodied candle currently. We'll see how it finishes. But the key thing, I suppose, the bulls would tell us we've broke 60 and we've held it. We broke it quite significantly there on the 21st. Test down was only for that Thursday. Friday, big follow through. We closed at 61.40, ahead of the big storms in the northeast of the United States. Haven't got intraday yet to that 62 level, but we are at 61.40, so relatively well bid, and it's another day above the 20-day moving average, which is now moving to 59.40. So still looking okay to the upside as we move into the end of the month, and February backing up. Brent, similar move, except we're talking about $66 and not $61.50. So same pattern there, $66, exactly same candle pattern on the more widely worldwide commodity. That is oil and Brent oil in particular. So indices, as the DAX a bit mixed now. We are currently, I think we're currently in the red, aren't we? As we opened, a lot of stuff going out of Japan, but we certainly opened in the green. Dow was down. Dow is still down, but the Nasdaq and the S&P are above where they closed last night. Last night we closed up 0.5% on the S&P 500 at 6,950. Let me just bring in what I'm talking about, and we're currently at 6,974 here on our derivatives mark. So strong day yesterday. We took a long position last night. Or just before the close, I got in at 6,943. We're in the money. I haven't actually set a target for this on this type, but we are, it is intraday all-time high. We're shy of at 7,000. So we'll be looking for 7,000. Certainly as a push. Still 25 points away from that, but that's still long today. So big Monday, follow through buying on Tuesday, which is always nice, quite interesting that we get that rather than a reaction to Monday's big up day. But I say 0.5% into close yesterday, 34 points. The Nasdaq was up 0.43 and the Dow was up 0.64%, but the Dow's down today. Obviously, it's technology week. Earnings, as I said at the top of the shop, Microsoft, Meta, both after the market closes tomorrow, Wednesday the 28th. Tesla during the market hours, and IBM I think is after the market close as well. And in Europe, we've got the major chip maker ASML, who are registered on the Dutch in Amsterdam on the Dutch stock market. They report as well. So it's tech week, big time. Consumer confidence, as we've just seen, has come in weaker than expected, and the Richmond index has also come in weaker than expected. But stock markets are moving forward. So we've been buying today. We've ticked higher. That was last night's where we got in, got filled here around about 9:30 time at 9:43, as I say, and it's up. But and up on the opening candle, so positive start to trading today, but still plenty of time to go. Trump has this speech. He's off to Iowa. Talk about the economy later. Last week's speech had its impact, didn't it? But the momentum, the weaker dollar ahead of the Fed, the Japanese situation, the situation around the government yields, that India-EU trade deal, positive spin coming out of Carney in Canada as well, all sort of pushing pressure back onto Trump and his political situation. He needs to come out fighting, needs to get on the stump, which is what he's good at. Let's give him credit for something. And is the believers, the true believers, the true 30% of the US voting population that believe everything he says are very much looking to see him firsthand and face to face as he travels the country once a week. Apparently, is what they're trying to get him to do. Anyway, so S&P 500 6,975. Nasdaq's the other one we took last night. Is that right? Nasdaq on the end of day. Scribbled note here. Long Nasdaq and the S&P, and then we were short Euro yen and CAD yen. So the Nasdaq's also in the money from last night. Ticked higher. And that dribble draw, we remember that was a line we drew on the higher time frame. So we just got to the that pink blob I've got on there. There we are. That's that upward trend here from the beginning of the year and beginning of the big rally. So this is now back in play. So we've been sideways channel. We're now pushing to the top of the channel. We're top of the Bollinger Band again. The here on the daily time frame, the K and the D line have turned up quite steeply in the last couple of days because of that strong day yesterday. That was enough to get me in. And the low of when he spoke, which has spiked down, we've rallied every day since. So 1, 2, 3, 4, 5, head of the tech. Any disappointment, any disappointment from any of the tech companies could have quite a significant rebound and give the excuse to cash in again. But any dip has been bought, like the one we saw at the beginning of December. dip here towards the end of November, the middle of December, the beginning of the year. The down leg each time you can see they're getting smaller. So it's a longer one there, smaller one there, smaller one again there. We bounced up. This one's similar to this one. So we got 1, 2, 3, 4 down legs, all of them being bought. So the lows are higher. The highs are yet to break higher, except you can see that quite nicely there, can't you? Today could be key, and obviously it's ahead of the Fed and it's ahead of the big tech companies reporting. So all to play for. Is this the first of the breakout? Is this going to be a resistance? As you can see here, 26,000 here on this last leg we had measured down was our next upside target on a NASDAQ. We are long from last night, and that is in the money. I'll be dragging the stop losses up later today. But obviously lots of big news to come tomorrow and Thursday. Thursday we've got Apple, one-time biggest company in the world. For Nvidia turned up. Microsoft were briefly, weren't they, as well? Caterpillar, Visa, and MasterCard also reporting after the market closes on Thursday. So lots going on rest of the week, and now we obviously got the wrap of the week and the month on Friday. So opportunities abound everywhere. So we're long the NASDAQ, we're long the S&P 500. The Dow didn't trigger last night, even though we had a good up day, because it's chopping around too much. It's not trendy. We're stuck at the 20-day moving average, and now we're down again today. Caterpillar could have a major impact on that index on Thursday with its numbers, but tech companies dominate this week. The FTSE today, I don't know if you've seen the Discord group. I went long earlier this morning on the FTSE. Looks like it's going to trigger on an end of day basis as well, but we went long this morning. Was it this morning or this afternoon? It was this morning, 10 o'clock. And that's just about that's just about in the money as well. It's come back. It was in the money. It's actually come back, giving up the ghost. It's sort of weakened on the Dow at the moment. So anyway, that's the trade we took on the FTSE, which I put up on our Discord group. Stop loss down here. It's end of day trade. So anyway, that's the hourly time frame. And the DAX has been a nice trader today. We've been in and out of this doing the 5-minute time frame a few times, round about the Open, round about the US Open as well this morning. So the DAX daily rolled over, still subdued and relatively subdued under the 20-day moving average, but having a real go to break back up. Some positive days outstripping the negative days since the leg down and the surprise into last week. Over that the moves. So the European deal with India hasn't really lifted the DAX at all today. So anyway, that's moving higher. There isn't actually an open trade on the DAX. Is there, or is there? No. It was going to be on Friday, wasn't it? I didn't take it. It's not Friday, that's today. Yeah. That's the indices. So I'm about done, actually. I haven't run through all of those. Any other questions, guys? Airways, yeah, no problem, my friend. Just be careful whatever you're trading. Understand, the spread is part of your business. So obviously take that into account. That's why when I'm shorting or longing the indexes in particular, for instance, the value is really in the Nasdaq, the DAX, and the Dow. The Dow and the Nasdaq for the US and the DAX for the European markets. The numbers are obviously bigger, but spread wise and points per pip and all the rest of it, or pound per point or dollar per point, however you trade it, the spreads tend to be a bit more amenable and workable. So there we go. Let's leave you with the euro and where the dollar has continues to be pressure, but what a move. Let me leave you with that chart. Massive recovery from just a couple of weeks ago when we were under 116. We are now 119.70. So again, euro here. It's the daily time frame. We go up to the weekly time frame, and we are off the charts, literally off the charts. So last time dollar euro was up here was the back of 2021. So June, the summer of 2021. It's a combination of strength of the euro and particularly the weakness of the dollar. The sell US trade, is very much about selling the dollar weakening. It's adding to the bid on the commodities and pressuring the administration. But a weaker dollar, you don't want it too weak. But it makes US goods more competitive in the world. But if everybody's finding alternatives from previous US alternatives to US goods, is it all going to work out? Tariffs historically, I know he keeps banging on about it being his fifth favorite word. It was his first favorite word till he was caught out about his family. History shows us, even though he's turned the world order on its head with the company tariffs, is he going to regret it? We'll see. But weaker dollar, the trend continues as we get to the end of January. It's certainly been a weak January for the dollar. We had that 3-week rally for the dollar at the beginning of the year, but that's been more than absolutely engulfed. I mean, that's last week, that massive post-Davos, massive engulfing candle. And you see that on all the dollar crosses. And I say euro is a good example. Swissy again, going the other way, massive engulfing candle. And the one we started with, the Aussie dollar, huge week last week. And that's followed through even more aggressively, or as aggressively this week, that gap on open. And this is all the way up here, September 2012 highs, and we saw the euro there at summer 2021 highs. The only lift the dollar's had is against the super weak, the weak yen, but the yen is now turning around ahead of that election on the 8th of February. So lots going on, opportunities everywhere, my friends. Always trade with good risk management. We are here to help you. It's all about managing your risk, understanding the account that you've opened. The accounts, as we offer more facilities, more services, the accounts get a little bit more complicated. Is the wrong word, but there's, have a look at the, what the targets are with our new accounts. And as I say, just watch this space. We have got a big announcement around MT5 coming shortly in the next few days. So those of you like me that love the MT5 and the MT4 platform, MT5 will be with us quite soon. So new accounts for that. But it doesn't mean you don't keep trading your other accounts. But the price of accounts challenges is getting more and more competitive all the time. So we had that offer where you could start from little as $7. So check us out. We are theproptrade.com. We are the grown-ups in the room. Come and join us. If you haven't got an account with us, we'd love to have you with us and give it a try. You've got a few dollars to invest, and something that counts one. What have we got to lose? Not a great deal, my friends. So give it a go, and we're here to help you make the best of what you've got. It's my demo account. So there we are, proptrade.com. This is our portal dashboard with all the details on of your trading account. This is demo one for here. So anyway, I will see you tomorrow. Big day tomorrow. I'll be there with you twice tomorrow. Once for the Bank of Canada. No rate change expected, but some comments and an interesting press conference, no doubt. And more importantly, the Fed later on tomorrow from 18:45 Universal Standard Time tomorrow. So see you then. Trade carefully and watch your risk at all times. All the best, everyone. Bye-bye.